Welcome to Taking Stock. I'm Amanda Lang. Coming up, ahead of what's expected to be another move higher by Canada's central bank next week, we're taking a closer look at rising rates and their implications for the economy and your finances. That includes worsening sentiment for business and consumers near term. But there is some good news. Small and medium-sized businesses are feeling more optimistic about the future. And for labor, this is an opportunity to make gains. How to make the most of it. That's all ahead. But first, the Bank of Canada takes the pulse of businesses and consumers, and in its most recent checkup, it's not exactly a clean bill of health. Here's a look by the numbers. Businesses are feeling gloomier, more of them reporting negative sentiment than those who are feeling positive, and their view of the future is also gloomier, though that remains well above pre-pandemic levels. Inflation playing a big role in that outlook. Businesses expect it to stay high near term, close to 5% next year and above 4% in 2 years, but falling to a more normal 2.5% in 5 years. That's echoed by consumers, though their fear of high inflation is worse. We see inflation hitting 7% in a year and 5.25% in 2 years before settling in at 3.4% 5 years from now. As for what we're doing about rising costs, more than 80% of us report taking some action to cope with inflation. 48% are buying less, 46.5% trying to find bargains, and a full 35% buying only the necessities. Part of the problem is that wage gains aren't offsetting inflation. 53% of those who had a raise said it wasn't enough to keep pace with higher prices. One other note from the Bank of Canada's business survey that illustrates the tough spot our central bank is in. 73% of businesses who think a recession is on the way say it will be caused by higher interest rates. Getting that balance right for business and consumers obviously key for our central bank, which already faces criticism for staying aggressive on rates even as we see a recession on the way. Sébastien Mc Mahon is senior economist at IA Investment Management. Sébastien, thanks for being with us.
Pleasure.
So this, of course, is the big question, is does the bank overshoot the mark? Give me your thoughts about where we are now. We already are seeing some of the effects of higher rates, and yet we know it does take a long time for a rate hike to work its way into the economy. Where do you think we are in that process?
Yeah, I think that we are in this adjusting process. Of course, the housing market now is showing some weaknesses. If you look at the aggregate market, we're already seeing lots of anecdotal evidence. At least here in the province of Quebec, we're hearing that the market went full stop in the last few months. So just through housing, that should be a channel to cause a recession. I mean, if you look at investment, residential investment as a part of GDP, in Canada, it's twice the size of the US. So the Canada's economy is very, very sensitive to interest rates. And if you look at ownership transfer costs, just the reselling activity, if it just normalizes, that could shave about 2% of GDP. So thus, it could lead to a recession in 2023.
Obviously, the bank would be aware of this. Is this just a matter where they would rather err on the side of a tougher recession than missing the mark on inflation?
Yeah, I think they have to go through that process. And, just circling to the Jackson Hole speech about Mr. Powell, of course, central bankers, they work together. And we're seeing the Mr. Volcker playbook right now, where you need to fight inflation to the end. If you don't fight it to the end, then you're going to have some issues, just like they had in the 1970s. This will likely create a recession. There will be some damage. So they need to go through that. So this is what we're seeing. And, fingers crossed that they have the courage to go through that, because you need to create a recession to kill inflation when you see levels like these.
So when we see what businesses and consumers think, as we saw in the sentiment surveys this week, what does it say about what the bank should be thinking? Because in both cases, while different numbers, but both the business and consumer community sees rates still very high 2 years from now, they also both see them kind of normal, a little higher than we've been used to, but back what we might consider normal, around 3% 5 years from now. Is that victory for the central bank, that that's our expectation?
Yeah, it's not yet victory, because also households are seeing inflation over the next year at 7%, at 3.5% over the next 5 years. When you ask businesses, about 80% of them are expecting inflation to be above 3% for the next 2 years. So victory is not reached yet, but of course, the inflation that we're seeing is eating into spending power. They are recognizing that the economy will be slowing down, and likely a slowdown in economy will be creating the conditions for less inflation and maybe another cycle after that. So I mean, it's a credibility issue. The Fed is fighting that. The European Central Bank is fighting that, and the Bank of Canada is fighting that.
We should note, we're getting these warnings from global bodies like the IMF and the World Bank that a global recession could be headed our way, that the efforts by our central bank and the American Central Bank to raise rates this aggressively could really spell dire things for the rest of the world. There's a complicated set of reasons for that. But if we do come into a place where there's a coordinated recession, everybody is contracting, how bad is that? How much worse is that for Canada?
Well, I think Canada is in a relatively good spot because of its labor market, which remains strong, and the price of commodities, at least for now, it's helping the Canadian economy. So we should see some resilience. Also, the demography in Canada is helping with all of the immigration that we have, which is acting as a tailwind to the Canadian economy. So on a relative basis, I think we should be doing well. But if there is a global recession, Canada being a small open economy, of course, we can't avoid it. We still place odds of about 70% on a Canadian recession by the end of 2023.
Sébastien, thanks for being with us. Appreciate it.
Pleasure.
Sébastien Mc Mahon is senior economist at IA Investment Management. Coming up, if there's good news to be had, it's that small business is feeling good about the future. Is that enough to keep a recession from biting too deep? Stay with us.